Alright guys, welcome back. This is going to be part 2 for me reacting to Hana Reloaded. So that's her channel. Never heard of her before, but she talked about GameStop, and of course I'm biased. Before I started, you know, I'm a meme stock investor here, especially GME, GameStop. So yes, everything that I'm saying here is biased, and she has the bias towards the other side, which I honestly seek out these type of people because, again, I want to be changed. I want somebody to change my mind about GameStop right now, which I think it's a great value creator, value stock at the moment, right? Again, this is my opinion. Obviously, it's probably a very unpopular opinion at this point in time. You know, they always look at the stock price. Oh, look at the stock price, and why are you focusing on the stock price when the company is doing better? So let's focus on the company. Don't tell me about the stock price. It doesn't really matter. If it goes down to $1, you know what, the fundamental of the company is still the same, and so you better come corrected. But let's continue. This is part 2. Welcome back.
It's on the level of a company that's making like hundreds of millions of dollars a year regularly, at least, if not more, billions, but it's not. It's based entirely off the fact that you guys just buy it and hold it. It's like an artificial price.
Sorry, I rewinded a little bit, so yeah, it might be a little bit repeated. So,
but it's not worth what it is right now in terms of the actual fundamentals of the company. It's inflated because of the sentiment that you guys pass around amongst each other and hold on to the stock.
The reason why I did it now in my life is because
do I have any stocks that I consider valued fairly or undervalued so we can criticize your picks? Nah, I'm good. And also, a company that's valued at $4 billion should be making $1 billion a year. You understand that companies make money more than 1 year? So yes, usually the entire valuation of a company is more than they might make in a year because you don't want a company that only lasts a year. But also, just because the overall market cap of something might be $4 billion doesn't mean that that's a reasonable price. The valuation as it stands for
market cap versus earnings per share. You know, isn't that how you evaluate any company at all?
Meme stocks are overvalued. That's kind of the point. That's a big part of it. Like, if you tried to sell GameStop today, like, let's say you wanted to take it private and someone wanted to buy it. No one's buying it for that much money. It's just not happening.
They would have to pay more. You think that if they were to take it private, people wouldn't want to buy it at this price? Are you crazy? I mean, you know, yes, notoriously, people from Wall Street, they want to buy it pennies on the dollar. And that's what they do. Because they want to undercut the entrepreneur who have made the money already, but they just need to scale any company. And Ryan Cohen know it. When Ryan Cohen sold Chewy, he sold it at $3 billion to a pet owner. That's like the highest valuation of any company that was being bought by anyone. The highest valuation. Guess what? If PetSmart were to be smarter, they would have bought it a lot earlier. Like, you know, who gave Volution Capital, right? Volution Capital gave Ryan Cohen the seed money to expand Chewy to $3.3 billion on a $10 or $15 billion, $15 million investment. So the reason why they didn't care to was because they did not believe in Ryan Cohen's ability to do that. Because at the time, you have the biggest competitor, which was, oddly, people think that it was Amazon. Oh, are you crazy? You think that you're going to be an e-commerce store? Pet food at that? Shipping heavy pet food heavy pet food back, and you think you're going to beat Amazon? Are you crazy? Well, Ryan Cohen did it, and he sold it for that success that he was. He sold it at $3.3 billion. And how much did they turn around and sell it for to retail? Are you kidding me? Are you... My point is that the evaluation that you have right now at GameStop is undervalued. Period. Doesn't matter how much you slice it. If I'm gonna find the video later, But I will show you Moran's point about IPO.
I really felt that if I didn't do it, then I wouldn't be able to explain it to myself. Like, hey, you didn't really even get.
It feels like you're very into black and white thinking here too, where you're like, they literally have revenue, so why aren't they closed if no one likes them? Listen, no one likes them. That doesn't mean that no one goes there. I don't like Walmart. I've shopped there before. Jesus, I've gotten into a discussion with fucking trolls on the internet. What am I doing?
Give it a shot.
They're not even trolls. They're just
Like, you can start anything late. I didn't get to my career at Costco until I was 30. Granted, I've been promoted extremely fast, but a lot of that is because I had all this life experience.
Yeah, that's a good point. This is why I don't like talking to meme stock people, because they don't see the forest for the trees and they drag them down with you. This has happened in the conversation with the PP people too. They get enamored with details and entirely miss the point of the stock market in the first place.
Experience before.
What is the point of stock market? Isn't that to create wealth? Isn't that to invest in a company that create value for people, right? That's the point of the stock market. What do you think the point of the stock market is?
Before I ever got there.
For people to just live there and die? Like, what?
But for anyone that's out there chasing dreams and ideas like Ryan is right now, or anyone else that wants to do whatever they want to love or their passion, don't be afraid to, to strike out and fail. I could do this right now and be terrible at it for the next 5-10 years and make a good run. And, I get to 50 and then I'm like, you know what? It just wasn't what I wanted to be.
I'll say this for Morantz. At least he has like a stable, normal job. So when this all blows up, I mean, it already kind of is. He's lost money, I'm sure, on this. But either way, at least he has like an actual job that he can fall back on. So that's nice.
It wasn't what I thought it would be, but at least.
He's not losing money if he's not selling. And he have his job, he could keep reinvesting that money into the company, like GameStop. It doesn't have to be GameStop. This is how you create wealth, is that you pick a company. How do you think that people become billionaires right now investing in Tesla back when it was $10 a share 10 years ago? Because they have a long-term perspective on the company. And they believe in the company. They believe in the leadership at the time, which was Elon Musk. As crazy that as it was, the media like you, now I don't know how big you are. I mean, you have a lot of following. I have close to 100 subscribers right now, so I don't have that reach that you do, Hannah. I think you... What am I trying to say? Sorry. Oh man, hold on. Let me continue real quick, and I'll come back to that point real quick.
I can tell myself that I gave it a shot, that I tried. The biggest issue that you have right now with investing, and
I'm not going to tell you what his real job is.
Individual.
He has one.
Giving you that quick, clip and the quick, headline is GameStop's not profitable. It's a terrible company. Ryan Cohen's a failure. Like, you shouldn't buy it. Get away. It's over. It's done. But it's like, what are they doing? They're giving you a window of like 2 years, 3 years, and they're trying to tell you this is what it is. I'm going to give myself a lifetime to make this failure if it's a failure. But I don't think it is, right? I really don't think it is. I think everyone's with the same wavelength on this to say, you know what? It's transition.
He just said he works at Costco. Yes, he works at Costco. You're right. I called you a troll. You're not a troll. You're just disagreeing with me. Reduction to absurdity argument. Reductio ad absurdum is also known as a fallacy, I think. Not that it fucking matters. But... Let me put it this way. I'm taking a very hardline stance against you, and I was hyperbolic because I get very upset with meme stock people because of the poor history I've had with the PP people. Fair enough. I will come at you from a place of assuming you are...
See, you are conflating the two. Now, Bed Bath & Beyond people, they have their own groupies, right? So, and that's the dangerous point that people, when they compare GameStop to any other meme stock out there, and the fact that you call it a meme stock too, that's also kind of propagandizing things, right? And that tells me two things. Number one, that you're watching a lot of those media hit piece about GameStop, which kind of the reason why you probably have the same talking point from them, right? So the fact that they don't have money and you don't even study the balance sheets. And even if you see that the balance sheet right now, that GameStop has a trailing 12 months positive, 3 consecutive trailing 12-month positive, you probably still, oh yeah, that's a terrible company. Oh yeah, look at Ryan Cohen. He's a failure of a CEO. Look, he come in and then, all of that same talking point. All I'm just saying here is that, can you at least give him another 5-6 years to succeed? He turned Chewy, and you told it, you said it earlier, that he got lucky on Chewy. He got lucky on Chewy. Well, Guess how many times he's been pitching to trying to get Chewy to where it is today. I mean, not today, but to where it was when he sold it to PetSmart. Hundreds of times, and people turn him down. He could have stopped at 30. He could have stopped at 55 pitch, but he didn't. He kept on going until somebody believed in him. That is a true testament of his failure, so to speak, based on what you're saying. Or the true testament of him getting lucky. You think people getting lucky 100 of time? And who try at the same thing 100 times? You get lucky one. Now, if he go and pitch to people and pitch to one person, and that one person get him the funding that he needed, then okay, I see the point there. That he got lucky on the funding part, but you have to grow that company. You have to make it, to $3 billion valuation. You think that PetSmart give him $3 billion just because, that's the value of the company? That's the sale of the company? No, they overpaid. Why? Because they understand that it's actually more valuable than $3 billion. You know what Chewy is now? $14 billion. $16 billion trading at. And so, and to say that was a lucky thing, has nothing to do with Ryan Cohen, that's BS. Short-sighted. And it's almost like you're talking the same talking point as these media people.
Be in good faith, because so far you haven't done anything like they have, so I apologize. I don't think GameStop has a good reputation. Of course people go there. Parents go there. I'm sure kids go there. But
I know, but they could get better reputation by being better operator, by being better, reputation, or trying to do something different. And so give them. What I'm trying to say is that you should give them a chance to make that reputation better, instead of just, GameStop is terrible. I hate GameStop. Bleh,
I think amongst a large demographic of adult gamers, like myself, a lot of people in my audience, and if you go on gaming spaces on the internet, forums and stuff, and GameStop gets brought up, typically the response is people lamenting about how their experiences are poor, how they feel bad for the employees, because they always seem like they're depressed and they're the only one in the store. They don't get paid well. They get treated like crap. They don't like the stores themselves. They don't like how it's all Funko Pop crap. These are what I have seen as someone who plays video games, as someone who considers herself very into gaming in general. That's the sentiment I see around GameStop generally, outside of meme stock communities.
Pivoting, and it's going to go great.
Yeah, because you're listening to those private equity backed article, or read to it, or read it, or listen to somebody who read that stuff and agree with you, right?
It just takes time. It takes quarters and quarters and quarters.
Dillis Filler, thanks for 6 months.
Of the year for it to go through, for you to see what's really happening here. So for everyone out there just bashing you immediately for going after your dreams.
I mean, the PPE show people are paid by their audience. Are you implying that you think that PP and all those folks are being paid by someone else, or do you just mean that they have perverse incentives because they're sort of grifting, in my opinion? Fenekagami says GameStop violated COVID restrictions and put their employees in danger, for example. Yes, I remember that. They pretended that they were, what was the word? Like a necessary business or something. They are paid by...
So when COVID came along, Ryan Cohen wasn't involved. So just so you know, when COVID happened, Ryan Cohen was not involved. Just saying.
Multiple parties, they are grifters. See, that's what concerns me. Do you think that they're being paid by hedge funds to besmirch GME? That's the vibe I'm getting. Do you think that PP is secretly working for Ken Griffin or something? Because that's where the line gets crossed to cuckoo land. You always take it to a conspiratorial place, and that's my concern.
Whatever you're attempting to do, just know that you could be terrible at something.
I know, that's why you should be stated in facts, right? So state some facts here. Go pull up the balance sheet and show your audience a little bit better informed, well-rounded plethora of numbers to throw around here, okay?
Your 20s, for years, for a decade. And then you can start something new if you needed to. But at least you gave it a shot, right? At least you tried for your dream. That was my biggest thing on that. I'm doing it myself. I'm trying my hardest, and I'm gonna keep going for it. So all the bumps in the roads, all the, we didn't even have a stellar month this month. October's over today.
Hedge funds could also pay them. Why not? Because that wouldn't make any sense and would also be illegal. Why would they do that? That doesn't.
Are you implying that hedge fund don't do illegal things? Come on, But that's okay. That's okay. She probably just live under the rock or something.
Benefit anyone. Dragon Ape says, you're the one that brought it up. Who do you think would pay them? And who would have the most to gain? Again, the fact that you are framing this as if you are in a secret war with hedge funds, that's not what's happening. There are no short sellers, quote unquote, on the other end of your trades that are like, ha ha ha, we need to crash GameStop. That's not how this works. Hedge funds, by their very nature, take all sorts of positions so that even if they lose out on some, they win on others. There are no hedge funds that are only short selling. There's no such thing as only short sellers. It's just weird that you guys always frame it that way, like Citadel only sells short. Like, no, they're a hedge fund. The next day they have a new conspiracy that he is.
Yes, but they have the incentive to keep the price down at the correct time in order to maximize their profit. Have you heard of Max Payne? Mac Payne. Option trader. You probably know what that is. But for those of you who don't know what that is, it just means that a level, when people are betting, the price go up and go down. It doesn't matter. What are you betting? GameStop, whatever. That's on you. They have a sweet point, a strike price that will deliver the market maker the most profit. So that's called Max Payne. Max Payne meaning paying to retail investor who buy puts or buy call in order to bet on the price action of GameStop. So perhaps you don't know that. So there you go. So market maker could manipulate the price down or up at will. So that's not a free market. You're acting like you are trading in a vacuum here. If GameStop is trading in a vacuum, you and I wouldn't be sitting here talking about this at all. It was because they did something illegal by withholding the buy button from the public. Has never happened. It's never happened in the history of the stock market. But yet nobody went to jail for it. Right? Nobody got reprimanded at all. The only person that lost their job was DFV. So that's sinking.
Today's the last day of October, and I'm going to tell you guys something that was probably the worst month I've had on the channel in over a year, basically. We had 90 subscribers the whole month. Basically zero.
Yeah, because you're giving people bad advice, I would argue.
Zero. Considering the previous month we had 700, right? So I was like...
It's almost like a bunch of people realized, oh shit, we're bag holders.
Man,
oh no, not again.
Both tough. You're putting out content, you're putting out information. Does anyone want to watch? Does anyone even care?
Well, why are you using that term? How about just long-term investor? A lot of people who invest in a long-term company has been bag holding until they become a lot better investor, and then evaluating company much better. You learn how to read the balance sheets, for example, and evaluate the company better than these analysts right here who want you to believe that somehow, some way, somewhere, that GameStop is deserving of $6. And based on your previous comment, you think that GameStop should be half that, $3 or $2 a share. So I understand your sentiment, but why is it nobody is covering this? No analyst at all? Just one analyst want to cover this? Really? And I thought it's the most hated. So why only one analyst covered this and not 100 analysts who want to come out and say GameStop is at $6 a share or even lower? Just one? Really? So you have to understand what's going on here. I'm not saying it's a conspiracy thing that happened. Sure, if you don't believe that, let's believe in the facts right here. The fact is they're actually making money. The fact is that they are actually doing better. Okay, look, 1 year ago, they lost close to $500 million. Okay, net income, $500 million. What is it now? $100 million. So you're telling me that $400 million swing is just a mistake? It's just luck? Get out of here.
But it's what I'm going for. It's what I'm trying to build. I'm trying to build a platform for myself to where, so that people can come and get information and understand their investments and make it entertaining. Do your best. But I just thought I could speak on this so that people understand my mindset when I look at Ryan or when I look at Larry and I look at GameStop. So you know what? Let me see how this really goes for me, because I have a lifetime. 40 years is a lifetime. And certainly to younger people, like if you're in your 20s right now, you're trying out GameStop, you tried out AMC, Bet Beyond, whatever it is, I'm not going to fault you for like making a mistake. You listened to some idiots and they told you it was all wrong, or they told you it was going to be great and it wasn't. You're in your 20s right now. Life's not over. You can rinse and repeat, wash it off, and get back out there.
Yeah, but also if you go online and for over a year tell people to hold on to a GameStop stock because you think the company is suddenly going to become one of the most highly valued companies ever, is that not maybe irresponsible on your part, and maybe you should feel a little culpable for people losing money?
Losing money? He's a long-term investor. So you only pick up a stock and then you just invest in 2 years, and if you lose money, you just sell it? What? How do you evaluate a company? How do you hold anything? Do you even hold a stock? What company have you all hold to and losing money out immediately? Then you call a trader. You're trading the stock in and out. We are a long-term investor right here. We understand the value of the company going higher from here. We think it's undervalued. You think it's overvalued. Okay, make your bet. But I think we're undervalued.
I'd feel gross if I'd done that.
But to judge...
Do I think hedge funds don't commit market manipulation? It's a broad brush that you're painting with. I am aware that illegal action happens. I do not believe that hedge funds are manipulating short selling to specifically destroy functional companies. No, because that doesn't make sense as a money-making strategy.
Well, then you should be watching Marantz. You watch Marantz, right? Wow, look at his face right there. So that means you watched him. So go watch Connect the Dot, lady. I don't know if you watched that. It's like you're saying that they're not manipulating from within. Come on. Like, have you lived in the rock?
And the state of GameStop is not due to market manipulation, other than from you fine folks. But don't worry, I know you're all individual investors just doing your own DD. You're definitely not a group of people trying to manipulate the price of GameStop.
Judge people based off of 2 and 3 years. Yes, I'm judging Bed Bath & Beyond for that simple fact that it's gone. I'm judging AMC for the fact of what's happening.
That's a good point, too. Hedge funds aren't a monolith. They compete against each other. If a hedge fund did something like what you're describing, if you all secretly had moon tickets like you all think, like just buying, DRSing, and holding GameStop is going to make you rich, then other hedge funds and large market funds would do it because they're not all a big, like, cabal that are colluding in a room together. They're competing against each other. So problems with the system are systemic as opposed to generally being the fault of individual actors. People are individually bad actors within a system, and you can argue that they're all pulled towards committing bad acts due to the perverse incentive structure. But to say that they're all, like, colluding would require evidence, not vibes.
Happened over the last 3 years, but that's not what's happened with GameStop. That's not what's happening with Ryan Cohen. So I'll keep painting the right picture. I'll give out the correct info, and I'll just let you know that this is something I've been working for a long time. But I'm only 2.5 years in. I'm not even, a decade in. So I've been doing things for a long time the right way, and I'll continue to do that. And that's outside of GameStop. It's everything. So not going to deter me, not going to get to me. But I just want to say thanks to everyone that's supporting the channel, supporting the content, and even on Halloween, it's going through my mind.
Okay, but Dragon Ape, if there were shorts trying to drive the price down, and there were longs who had the opposite feeling, then they would, like, equal out in some way, wouldn't you think? Like, it seems like you all have this preconception that short selling happens to perfectly healthy companies and it destroys them. That's not how things work. Like, look at, for instance, Herbalife. Famously, there was, I forget his name, but the activist investor who took a large short position against Herbalife. And Herbalife, outright, in my opinion, is a scam. Herbalife's a multi-level marketing thing that I think is bullshit. Bill Ackerman, thank you, that is his name. That company's still going strong, even though, again, I think it's bullshit. Like, you can't take a company that's making a bunch of money and destroy it simply through short selling. You're looking at buzzards picking at a corpse, and you're assuming that the buzzards killed them. Short sellers aren't in things for the long term. Typically, short selling are usually short-term bets that are made about companies that are probably not doing too good, usually. People don't look at a company doing amazing, that stock price is reasonable based on their valuation, and go, I should short that. Why? You need a good reason, and usually the reason is because people think that there's some news coming that's going to be bad for it, or that the company's not doing very well.
Well, but then they also have a long-term short position on GameStop for decades on end, right? I mean, they could potentially do that because they think that over time, companies will go down. Now, I understand what your point of view is, that short-term shorts are usually there because of certain news and all that stuff. Yes, there's a majority of them. But to say that because of that, there's no manipulation that happens is also kind of completely wrong as well. Now, let me make this point, though. The short seller are there for different reason, obviously. For one reason, right, is that because they think that the company will go down under. For whatever reason, they have the conviction that this company is going to go down for bankruptcy. As we all know, what happened to GameStop before. We have a lot of goodwill value and all that stuff. Now we do not have any more goodwill value. And so that's why they post a whole bunch of loss in that, window time frame, like a couple of years ago during Corona. And people thought it was like, oh, Corona shutting down the store. No. Actually, GameStop makes money during coronavirus. So if you look at, let me see, 2019, right? Let's go back. 2019 right here. 2019 around here. This is C19 time, right? If you look at their revenue right here, see, they make $8.7 billion, right? And if you look at the net income, I think it's this line right here. So hold on, let me put it kind of smaller. 1 second. Let me find that line real quick. So net income right here. So net income is this line. I'm looking for, see that? So net income around this time. Okay, so this is Corona right there. This is it. So this one right here, this net income loss, has nothing to do with their profitability. We know that from Moran's video, right? Because they had burned their they have started to burn their goodwill value. I think it's around here, right? Like this $2.5 billion. Okay, which one is the goodwill value? It's not on this sheet, but if you look at the goodwill value at that point in time was, hold on. So they started to post like $500 million. All of this stuff has to do with the goodwill value, right? And this is like even heavier, $1 billion. It's not that they are losing $1 billion, it's that they were impaired by close to $1 billion. But if you look at the previous years, they were actually making money. Look, $300 million, $350 million. These are the valuation that we're going to go back to, hopefully, right? With lower profit, top line revenue, in that way. Now, if you get back to $8 billion, it's not going to be 300 million here. It's going to be even more because, again, the profit margin is a lot higher. But you know, the reason why they posed a loss was because of the goodwill impairment. So I know it's a complex kind of concept to grasp. That is why you have people like this coming out and say that GameStop losing money and people are hating them, or nobody shopped there and all that stuff. And it's all hyperbole, to say the least.
Fenekagami says, hedge funds fuck poor people in the government, not businesses. Most of their market manipulation is through the banks. See 2008.
True.
And so, good luck, guys, on all your dreams and everything you want to grind out for. The last part about this is this, you know.
Short sellers have shorted GameStop for almost a decade. Again, the problem is you're treating it as a monolith. Short sellers are not one block of people. It is a ton of individuals and organizations.
I know, but they could open the position more and more and more.
For 10 years.
For 10 years,
interest
yeah.
on that is going to exceed any potential profit that you make from it. Like, you have to do these relatively shortly, because the longer you hold a short position, as I'm sure you know, the more it costs. It costs money.
Right, and that's why they hire people to try to have you sell the share.
It can be very challenging at times. And with your
like, sell GameStop now, because I'm holding it at a higher price, and it should be at $2 or $3.
You can walk away, you can fade away if you had to, but just know life is long just as much as it is short.
Jesus Christ.
Good evening, guys, and welcome back to Morant's Rants. Plenty of information, a little bit of motivation, a whole lot of truth, no financial advice. It's going to be a longer format video at night right now, because I work and I don't have time to come to you guys and do the live streams.
Current short interest in GameStop is around 24%. That's not a lot, considering the height was 140. If short interest right now is at 24%, how do you expect MOAS to happen? Do you believe in MOAS? I guess you don't. Maybe you believe in the fundamentals of the company.
Volkswagen was 18.
I'll be doing this longer format video. Might be 20, might be 40 minutes, might be an hour. I don't know, but I got a lot to get out there. Right now, this is going to be Connect the Dots part 47, 48, somewhere in that range. I'll title it later when I'm done tonight, but let's go ahead and go into it. We're going to talk about a lot of things. Today, the headline was GameStop's 401k, the update for the employees themselves. So I'll give you some insight on that. Additionally, Larry Chang put out a great tweet. I hope people watched it, and I'll dive into that as well. And then, of course, we'll look at the stock and the price movement.
The biggest short squeeze in history before GameStop happened with a 13% short interest. Cool. Cool beans? Why do you think that this situation is like that situation?
That it was, or that it wasn't. So, no edits, no cuts, guys.
Because GameStop's going to pose a profitable quarter soon.
Welcome back to Morant's Rants. Plenty of good information, a little bit of motivation, a whole lot of truth.
And also, that wouldn't be MOAS. MOAS is like the conspiracy that it's going to go like infinite or $1 million or whatever.
No financial advice.
Have you guys brought the bar down to just like making a little money now?
So here
also, can I ask, Dragon Ape, what's your price average?
Is what everyone wants to talk about. And GameStop is making a series of important changes to their benefits program that become effective January 1st, 2024. These changes include changes in the premiums you pay for your health coverage. In addition, GameStop will no longer provide the following employee.
How is Morantz even going to justify this? Basically, if you don't know, GameStop employees who already are underpaid and get treated like shit, their benefits are getting cut. Ryan Cohen decided to cut their goddamn benefits. Man of the people, Ryan Cohen, has decided to cut the benefits for the company.
Funded benefit coverages, which is basic life,
wait for it.
Dismemberment, short-term disability, long-term disability, employer match of the health savings account, and employee match of 401k. Now, as you guys read all this,
why do you think it's at a discount?
It tells you they're still offering plenty of other benefits, which were awesome. But yes, the big one is employer match 401k, taken away, some basic life, things like that. Those are all like trivial. So what you can look at this, and only because I implement the 401k for my company, as far as the employees that I work with, that's what I actually do. So I understand the benefits of it and the pros and cons, I should tell you. And so a lot of people are looking at this and say this is a red flag for GameStop and their earnings, or some.
It is?
Was trying to relate to they're just not profitable and they're trying to make cuts everywhere they can. Yes, I want to put it very clear to everyone. GameStop, they are cutting up everything they've done. They're renegotiating everything, and they should. And I'll tell you why they should.
It's on a 2-year downtrend because it's shorted every single day? Have you considered it's shorted regularly because it's an overpriced stock?
Towards the end of this, so after we go through this, but what are the employees really losing? Not much, because when I looked at it, I saw
Best Buy mattress firm, IBM cut 401k match benefits. Best Buy has 90k employees. Yeah, Best Buy is probably not doing great either. A lot of retail stores aren't. Also, Mattress Firm is also a retail store. Don't know about IBM. Don't know their situation. But yeah, that's not a good sign when that happens to any company. It's like you think I am only interested or attacking GameStop. It is so weird how you're focusing on this. You're literally doing...
Because it seems like you are. Why don't you do a video about Best Buy? How they're struggling compared to GameStop. Actually doing pretty good now. Actually doing better than... Best Buy, which is, technically it's not their competitor, but at least they sell the same thing.
Whataboutism. Yes, that's also probably not indicative of a good, healthy thing going on at that company. Correct?
all here, and I read through it all. This is the whole pamphlet here, and it said they're still going to offer them, medical, obviously, and they have to pay a couple of premiums themselves. But this is no different. I actually worked for a couple of corporations. First corporation I ever worked for was called Gannett, other than the United States Army, right? But I worked for Gannett, in which they're the parent company of Arizona Republic, USA Today, Curbuilder.com at the time, and then of course the Desert Sun, where I live, the newspaper. But they had plenty of benefit programs, and then they cut them as well, and they went ahead and laid off everybody. This is during 2008, 2009 timeframe. But right now, GameStop is.
We'll find out soon what the fair price is. Why do you assume right now is not a fair price? Like, how would you determine, like, in your head, right now, how would you know what a fair price is? Like, what is your criteria for that? Is it vibes-based, or do you have a specific criteria?
Is just telling you that they have.
Well, that's why you learn to evaluate the balance sheet. Whatever the fair price is. This is how you do it. You look at the stats. Is it actually good? Is it like a Z, Alleman Z-score at 3? What does that mean? Have you ever considered doing that? How about debt to equity? Have you ever considered this? Now, they use debt as in the total debt, okay, for this particular metric here. But even then, it's 1-to-2 ratio of equity, meaning that they have less debt than shareholder equity. That's a good thing. Look at the interest coverage. They're able and is going to be doing better, obviously. What does it mean to have 5.9 versus -1, for example? So you learn to evaluate this right here. So that's how you evaluate the company correctly. That's how you know what the fair value is. And if you just throw a number like $3 a share, you better have a reason to do that, because the book value alone right here is $4.15 according to this particular website. Now, if you look at the profit margin, yes, we need to fix this, but it's coming. This fiscal year, you have 2 more quarters to go. No, actually, 1 more quarter to go. And so, third quarter just ended. So we need to see that number to see what's moving forward, right? Hopefully it's going to be better. And how do you evaluate the company as well? Here's how I evaluate the company. This is how I know how valuable the company is. Insider ownership has been buying like crazy. 12%, 13%, 15%. Whatever they want to own more, not less of this company. And so that is how you evaluate this company. Now, if you want me to sell this company, you better have a good reason for me to sell this company at a loss. Why would I want to sell at a loss when I know that the valuation of the company is shot? Like, somebody doesn't want this company to succeed, right? Now, of course, I know Ryan Cohen's going to fix that, hopefully. If not him, I don't know who's going to be best for the job. But I think he's doing a great job right now.
Have some increases and have some changes. Now I work for Costco right now, and Costco does do a 20% match, i.e. they match 100% up to 20%. Then they also give you other.
I've heard Costco's quite good to their employees for a company their size, so good for Costco.
Incentives of things that you can buy and you pay for and come out of pocket, but it's always changing. What's the biggest change for me at Costco?
There are multiple ways to calculate the fair price of a stock. You can do fundamental analysis or technical analysis or a mix of both. You sidestepped the question. I didn't ask how one might do this. I asked what is your criteria specifically. What do you think a fair price is based on current factors?
Working there was the bonus program. So they actually have what they call an extra hour program where
IBM is cutting the 401k matching and replacing it with a type of pension. Oh, isn't that better? Isn't that usually better?
they actually pay you an additional $2. It's called an extra check. They pay you $2 for every hour you work throughout the year. And then they give you a bonus check every 6 months for those $2 of every hour worked. It comes out to around $3,000 bonus. Everyone gets one every half year, right? And so it was amazing. Like when I first got hired, they're like, here's where you're going to start, here's where you're going to end. But just know that if you work 8,000 hours, you're going to have a bonus and you'll start getting bonuses. And the bonuses now are like $5,000, $6,000 every 6 months. So you're like, okay,
cool.
Okay, this is a great program. Well, do you know what happened to the employees moving forward? They don't get that same bonus program. They took it away.
That sucks.
And or they told them, no, it's not 8 hours anymore. Now it's 13 hours. Now you got to work there for 10 years. Now you got to work there for 9 years, 8 years, because a lot of people aren't full time when they initially get there. So I mean, how much time do you put in before you start getting bonuses now? Are those Costco employees disgruntled? Are they mad about something that they didn't know they weren't getting? No.
They should be. Yes. Yep. If you know about it, I would be. Yep.
Oh, the original ones that are
anytime that business relationship between employer and employees, take something away from the employees, yes, they should be mad.
About it in the other program, hey,
That's literally the point. You have to, like, collectively be mad about things to get things done.
benefits are there to keep them intact. Right now, if you're going to build retention within the company, you're going to build a culture. It started out last year when they paid the executives.
If you look at the technicals of the stock market, the options market, the short interest in the stock that is locked by retail with DRS and insiders, the fact that the shorts can't get access to sufficient shares to short it more, it's obvious the price is oversold and the lowest point it can go. What is your price target? What is your price target for GameStop? What do you think it would be? What do you think the fair price is? Specifically, I am looking for a number, because you're saying a whole lot of nothing, and I'm concerned it's because you're embarrassed to say what the real number you think is.
Or, I'm sorry, the store leaders, the RSUs.
The real number doesn't, it hasn't been evaluated correctly. How can you project what GameStop's going to do 20 years from now? Does anybody could imagine Amazon at this price level? Does anybody could imagine Tesla at this price level? That's the whole point of long-term investing, is to hold out for those type of evaluation based on the fundamental of the company. So if you're saying in 3 years Ryan Cohen should be able to do that already, it's just so short-sighted, you know? Again, we're a long-term investor here. We don't think short-term burst of price action here.
That was a big thing. I know the stock price is down today, but if you work hard and you get your store up and running and you see minimal profits all the way through, those incremental profits are going to turn into a big snowball for the company. And it can, in turn, help you make a lot.
90% of stocks are priced higher than GameStop on the same or similar fundamentals. Oh boy, that requires a big ol' citation.
The money based off of the stock movement that is. The stock's undervalued as it is right now.
No, not that I know. He's talking about Costco because he works at Costco.
But these are not things that deter people from getting the jobs and keeping the jobs. They still have to pay their families, right? They still have to pay for the expenses they have. That way, if they tell you, you know what, we're not going to match your 401k. I know plenty of plumbers, construction guys, a lot of people that don't even contribute to 401k.
His argument is literally just, they're desperate enough that they need the job anyway, so don't worry about it. It's not going to affect the number of employees. Wow. You just don't give a fuck, do ya?
401ks or don't have a plan. You're an entry-level retail employee. Let's all calm down before we throw up our hands and say this is terrible for the employees. It's not that. They're letting you know they want to be healthy, but they want to renegotiate their deal. Now, I know their deal. And if you don't know their deal, I'll show it to you here. They have their 401k plan partnered up with Principal Financial. Okay?
We've looked at enough rants. Can we get to the BBBY people now, maybe? Actually, let's do one more. Let's do one.
Wait a minute. Why are you quickly changing the best point ever? There's a reason why she's doing this, you guys, and it seems like, oh, okay, I know the deal now. So let's see, which one was the one that she showed? 1 second. So conveniently, she skipped through the most important part for your audience, and I think that's dishonest, you know, to say the least. I think it's this one right here. So let's watch that together, huh? Just off chance you make it this far and you are, you know, a fan of let's see, a fan of Hana right here. So why switch
is the individual?
Why switch it so quickly? So let's finish this off. And this is Marantz right here.
They're the individuals that carry this. Now, when I saw it before private equity came in and started making changes, it was Wells Fargo. And I read up on this and it said, Principal Financial is the 401k provider for GameStop. And I was like, really? This is amazing. Because when you go and look up Principal Financial, you're going to see a board of directors. And you're going to go, you know what? Now I get why they switched them out. So the first one here on Principal Financial, as I looked at it, he's with PayPal Holdings. We all know how I feel about PayPal and private equity and the ties they have to it. McKinsey and Company. So when you see these guys sweep in, and he's been a director since 2019, you'll then see another one here. And this is Miss Beams. Miss Beams just got there. And she came from BrightSphere Investment Group. BrightSphere, if you don't know who they are, they're right here. And they were actually partnered up with the little company, and you guys know who they are. They're called Ares Capital. So Ares Management went ahead and bought them out, bought a large portion of their portfolio, you name it. That's when this young lady came over here to Principal, the one I was just showing you. But BrightSphere, of course, they partnered up, and they also have partnership with the Putnam Investments. And Putnam Investments, if you don't know who they are, they're partnered up with BCG and MMC. And that was, we've talked about this all before in other parts. The Marsh McLellan, right here, it's all here. It's right in here, guys. So they did all that where they were bought out by Boston Consulting Group. They partnered up with Putnam Investments. They did it all in 2007, 2006. The point is, it's all private equity. That's basically what I'm trying to tell you there. So yes, she has direct ties to that. Additionally, I believe she was on Voya, if I'm not mistaken. And as I look at here, yep, Voya Financial. So Voya Financial Inc., if you don't remember Voya Financial Inc., they were bought out by private equity. Additionally, they did a deal right here, a massive deal with Athene and Apollo Global Management, Crestview Partners as well. We're talking about billions and billions of dollars of retirement funds. So here's my point. When you look at Principal Financial Group, okay, they go ahead and they were bought out just recently in 2021, February 2021. They were bought out by Elliott Investment Management. Now listen, Elliott partnered up with Apollo and they did the Caesars deal. Elliott is private equity. It's just a sheer coincidence that Elliott Group went and bought out the investment firm, financial group, that's controlling GameStop's 401k. And they did it in February of 2021. We all know that was after the great blowup. Now, you might call me a conspiracy theory guy, but I'm telling you, Ryan, you're doing a great job because you're not going to negotiate with terrorists, as I call it. And here's why, for the lack of a better term. Because these guys are painting themselves just in a private equity corner. So they're driven by private equity. I went and read through every single board of director. I was checking them out because I'm trying to figure out why Ryan won't do the deal with them and or he's renegotiating the terms of the 401k that they're handing out. Now, all of this makes a lot of sense. I know this individual here went to the Wharton Business School. I wonder if that was just a coincidence. But when I went and started reading through and I saw they had plenty of ties, even Bain Capital, one still works for Bain Capital, or still comes from there. Private equity is on this board of directors, okay? And I read them all, and I was going through them. And right here, I think she's with Bain. Fannie Mae and this young lady, another capital firm. I don't know if it was her. It had to be her because I know I read it and I saw her face and it looked familiar. And they always look familiar. But maybe I'm wrong. I can be wrong. Maybe I read it on somebody else's name. Oh, this young lady. Here we go. Bain Capital. There you go. So she's with Bain. A lot of people, she's also with State Street Global Advisors. It's just private equity, right? So this whole damn Principal Financial, I'm happy for Ryan not to team up with them and partner up. And you know what? I just sped through this whole thing. I'm happy I did it. So here's the last part. This is going to be, let's just get this clear before I even look at this, just so that we're clear, guys. I want to make this very clear to everybody. Ryan is renegotiating everything. We get that part. 401k, everything included. Those little cuts that he's making, those little differences are going to make the difference on that balance sheet. And if that balance sheet wants to read a huge positive, that's awesome. Are they going to do it in January? Yes. And why? Because that's when the open enrollment happens right now. Renegotiate for next year, 2024, and or you do not commit to so much. I do this all the time. I'm just telling you this. Every year I evaluate the budget and I go, you know what? We're not going to do the Chamber of Commerce Platinum package. We'll do the silver. We're still helping out the community. We're still doing everything, but we're not buying the banners. We're not doing the diamond package. We're not going to be at every event, but we'll be at enough just to show face. GameStop has enough hourly employees. Okay. This is all for hourly employees. This has nothing to do with salary employees. These are exempt employees or non-exempt employees, I should say, that are eligible for these benefit programs. They're still getting medical. They're still getting dental and vision. It's still there. It's just going to be changed on the 401k mat side. And I wouldn't want to put my money with private equity either. And I'm happy he's not doing it. Now.
All right, guys. Sorry, I have to cut some of the part out. Got distracted by the dog. So let me end it by saying this. It's very curious to me that this Hannah person, quickly... after she's showing all of this and Rance was about to go into the private equity part of the portion, she just quickly, hold on, let me play through that one real quick.
Wow, you just don't give a fuck, do ya?
One case or don't have a plan. You're an entry-level retail employee. Let's all calm down before we throw up our hands and say this is terrible for the employees. It's not that. They're letting you know they want to be healthy, but they want to renegotiate their deal. Now, I know their deal. And if you don't know their deal, I'll show it to you here. They have their 401k plan partnered up with Principal Financial. Okay?
We've looked it up.
Nah. I'm not going to listen to this part because this is the most important part, right? So I showed you already what that part was all about. It's about private equity. And it's curious to me that this person is actually very quick to kind of like, oh, I don't want to watch this part, right? So I don't know. Again, I don't know if this person is being paid to do this particular segment. As you know, like people could get paid to bash a certain stock or bash a certain community. I'm not saying that this is one of them at all. Again, I don't watch you that often to kind of get that assessment, but I get that you don't like GameStop based on what I'm seeing here. So hey, just because you don't like GameStop doesn't mean that you're a bad person. I just think that you're misinformed, right? And the fact that you don't really want to show the whole story. And this is why I invite people who just, a fan of Hannah, to look for your own research. And you might see something that you disagree with here. And I challenge anyone to come at GameStop at the most fundamental level, right? Look at the number. What are they doing? What are they doing differently? The fact that they are cutting the fat, right? The fact that they are renegotiating the terms for all of the 401k. And as we knew just now, based on Rand's explanation about why they go through all that stuff, is because of the private equity portion of it. All of these people are associated with Bain Capital, BCG. All of those companies are notorious for gutting the company from the inside in order to profit as quickly as possible. So this stuff happens, and GameStop just doesn't want any part of it. Even at the risk of people seeing them as somebody who, is a villain here, which they're not. They're not doing this to spite anyone. They're doing this to negotiate a better terms for their employee and shareholder at the end. So it's good for the investor, right? If you see this in other a company and they want the stock price to go up, they would have rocketed up. This new would be a good news for any other stock. But for some reason, GameStop is not one of them, right? Again, price action is psychological, you guys. They want you to feel this way about the price action. That's why they don't want you to focus on the fundamental of the company. I don't care what the price is doing. At one point, you could buy Amazon at $1. At one point, you could buy Apple at $1 a share. Does that mean that Apple deserved to go to die? 10 years ago? 15 years ago? Of course not. People just didn't see the value back then. People didn't believe in Steve Jobs back then because Steve Jobs was just a wild visionary who would spend so much money, losing money and all that stuff, right? But people don't really understand the vision of an iPhone, the vision of an iTunes, and vision of, iPad and all that stuff. All of those stuff happens because people visualize it for the long term, right? So I hope GameStop is one of them, right? I'm biased, like I said, and this person is also biased in the way that she's covered GameStop, right? Because we all know, she doesn't like GameStop whatsoever. So anyway, I hope you guys are entertained. I'm gonna crop this video, and I'm sorry for that. I was originally gonna do a, kind of edit, no cut, no edit or whatever, but I had to.